Good morning, ladies and gentlemen, and welcome to the Apyx Medical Third Quarter 2025 Earnings Conference Call. At this time, all lines are in listen-only mode. Following the presentation, we will conduct a question-and-answer session. If at any time during this call you require immediate assistance, please press star zero for the operator. This call is being recorded on Thursday, November 6, 2025. I would now like to turn the conference over to Jeremy Feffer, LifeSci Advisor. Please go ahead, sir.
Thank you and welcome everyone to our Third Quarter 2025 Earnings Call. Representing the company on the call are Charlie Goodwin, Chief Executive Officer, and Matt Hill, Chief Financial Officer of Apyx. Before we begin, I would like to remind everyone that our remarks and responses to your questions today may contain forward-looking statements that are based on the current expectations of management and involve inherent risks and uncertainties that could cause actual results to differ materially from those indicated, including, without limitation, those identified in the Risk Factors section of our most recent annual report on Form 10-K, our most recent 10-Q filing, and the company's other filings with the Securities and Exchange Commission. Such factors may be updated from time to time in our filings with the SEC, which are available on our website. We undertake no obligation to publicly update or revise our forward-looking statements as a result of new information, future events, or otherwise. This call will also include references to certain financial measures that are not calculated in accordance with generally accepted accounting principles, or GAAP. We generally refer to these as non-GAAP financial measures. Reconciliations of those non-GAAP financial measures to the most comparable measures calculated and presented in accordance with GAAP are available in the earnings press release on the Investor Relations portion of our website. I would now like to turn the call over to Mr. Charlie Goodwin, Apyx Medical's President and Chief Executive Officer. Please go ahead.
Thank you, Jeremy, and thank you all for joining us today. For our usual format on these quarterly calls, I will start with a review of our performance over the past several months, and then I will turn the call over to Matt for a review of our third quarter financial results, as well as our updated full year 2025 guidance. We will then open the call for your questions. But before I jump into the numbers, I am excited to share an important update about the evolution of our company and our continued commitment to innovation and meaningful outcomes for our customers and their patients. With the development, clearance, and launch of the AON body contouring system, one thing has become clear. Our identity and the way we present this segment of our business must evolve to reflect who we are today and where we are going tomorrow. That is why we are officially announcing the rebranding of our Advanced Energy segment, which will now be identified as Surgical Aesthetics. This is not just about a new name, it's about better aligning our brand with our mission and the durable and transformational results that our surgical products deliver. Let me begin with a review of our third quarter performance. We reported total revenue of $12.9 million compared to $11.5 million in the same period last year. This growth was driven by a $1.8 million increase in sales of our surgical aesthetics products to $11.1 million for the third quarter. This is the result of an increase in U.S. sales of over 30% for the quarter and reflects initial sales from our commercial launch of our AON body contouring system during the quarter, as well as increased volume of single-use handpieces in both domestic and international markets. Overall, the AON soft launch, which took place throughout much of the summer, and the full commercial launch in September have been overwhelmingly successful. We are thrilled with the market's feedback we're receiving, which has translated in both pre-sales and now initial deliveries, which I will get into more in a moment. I want to note that this growth was offset slightly by a decline in our OEM revenue. For the third quarter, we reported $1.8 million, down from $2.2 million in the same period last year. This decline was anticipated and is due to reduced sales volumes to existing customers, including Symmetry Surgical, under our 10-year generator manufacturing and supply agreement. Strategically, we have shifted our focus and manufacturing resource from OEM towards our surgical aesthetic segment, particularly the AON launch, as we believe this segment represents the future of the company. It is worth highlighting that we made this tremendous progress while emerging from the significant cost reduction and restructuring announced in November 2024. I am proud to share that these efforts have resulted in a leaner operating structure and a meaningful reduction in our cash burn. These improvements have strengthened our overall financial health, giving us the flexibility to invest in AON and our broader growth strategy with greater confidence. While restructurings are always challenging, I want to express my sincere gratitude to the employees here at Apyx. It is encouraging to reflect on the positive outcome driven by our team's dedication and perseverance. Let me now provide a more detailed overview of our progress. It is amazing to think that only about 6 months ago, we received FDA clearance for the AON system and soon after began to realize the significant impact this system could have on the market. For those who may not be fully up to date, let me provide a brief overview of AON and why it's generating such a strong market response and why we believe it will help shape the future of aesthetic surgery. AON is a groundbreaking body contouring system designed by leading surgeons to address many of the challenges and limitations they experience with current systems in the market. And please keep in mind that most existing systems on the market are limited to a single function, while AON seamlessly integrates fat removal, closed-loop contouring, tissue contraction, and electrosurgical capabilities, empowering surgeons to deliver the most comprehensive body contouring treatments available. With advanced features like lift technology for real-time adjustments and Renuvion for enhanced tissue contraction, AON sets a new standard in surgical care, streamlining procedures and maximizing patient outcomes. The result is a system that combines precision, versatility, and innovation in an all-in-one platform with unmatched return on investment. And don't just take our word for it. As part of our soft launch, we initiated an ambassador program with key opinion leaders in critical geographies throughout the U.S. Many of these leading surgeons are now actively discussing how AON delivers consistent and reliable performance, with several of them contributing at our workshops and clinical symposia supporting the broader commercial launch. The feedback has been incredible from the start, which we attribute to this system really filling a void in the market that nothing else has come close to addressing. Just last month, we hosted a virtual KOL event for investors and analysts featuring comments from world-renowned general and plastic surgeon Dr. Paul Vanek. We were fortunate to have Dr. Vanek share several case studies using the AON system, followed by his general insights on the system's functionality and its potential impact on surgical practices. I encourage any of you that missed this event to visit our events page on our company website to listen to the replay, which is just a very compelling overview of the AON capabilities. One of the key points raised during the KOL event was the importance of AON's integration with Renuvion, our innovative, minimally invasive surgical solution for treating loose and lax skin. Renuvion provides durable, transformational outcomes and is rapidly gaining traction among surgeons. We believe it represents the best-in-class option for treating loose skin and should be considered the new standard of care, particularly for patients experiencing skin laxity after significant weight loss, including those using GLP-1 medications. This expanding patient population presents a tremendous opportunity. With more than 15 million people currently on GLP-1 drugs in the U.S. alone, we're still in the early innings of this powerful market shift. We believe Apyx is uniquely positioned to meet this demand and help lead the aesthetic market into the next phase of growth. As I have said before, the major shifts in the market with the rapid adoption of GLP-1s are unlike anything that we have seen in recent history, and Renuvion has proven to be an exceptional treatment option for the skin laxity experienced by many of these patients. Combined with AON's other features, we believe Apyx is further differentiated and has elevated our position in the surgical aesthetics market, thereby making us the trusted surgical partner in the next era of aesthetic care. As I mentioned earlier, the full U.S. launch of AON began in September and has been highly successful to date. Our team was well positioned following the soft launch earlier this summer, and strong interest quickly translated into pre-orders ahead of the launch. I believe the launch and overall interest in AON has exceeded all of my expectations across every metric. I look forward to realizing our long-term vision of walking into almost every surgical practice and seeing an AON system at the center of the operating room. When we first introduced the AON and talked about the initial capabilities, one of the commitments we made was the submission of an additional 510K to the FDA for the label expansion of AON to include power liposuction. I am pleased that early last month, our team submitted this follow-up application and anticipate receiving clearance in Q1 of 26. This is an important update as receiving market clearance for power liposuction will solidify AON's position as the first fully integrated body contouring system, positioning AON as the new gold standard in surgical aesthetics. I think it is important to note that upon receiving clearance from the FDA, we will be able to activate this function on AON systems already in the field. While we were still in the early stages of the launch, the market excitement is quickly turning into orders for AON. As a result, we are updating our revenue targets for 2025, which Matt will detail in a moment. I will now turn the call over to Matt for a review of the third quarter 2025 financial results in more detail, along with our updated financial guidance for 2025.
Thank you, Charlie. Before I get started, please note that all references to third quarter financial results will be on a GAAP and a year-over-year basis unless noted otherwise. As Charlie mentioned, total revenue for the third quarter 25 increased 12% to $12.9 million compared to $11.5 million in the prior year period. Revenue for surgical aesthetics segment increased 19%, or $1.8 million, to $11.1 million compared to the $9.3 million last year. As Charlie referenced, this growth was driven by sales of AON as we commenced our commercial launch during the quarter and an increased volume of single-use handpieces in both domestic and international markets. These increases were partially offset by decreases in domestic sales of generators, including upgrades to the Apyx One console, where the purchase of AON was not part of the sale, and upgrades to the Apyx One console in international markets. Turning to the OEM segment, sales decreased 18%, or approximately $0.4 million to $1.8 million for the third quarter of 25, compared to $2.2 million for the third quarter of 24. The decrease in OEM sales was due to a decrease in the sales volume to existing customers, including Symmetry Surgical under our 10-year generator manufacturing and supply agreement. Domestic revenue increased 20% year over year to $9.3 million, and international revenue decreased 4% year over year to $3.5 million. As a reminder, the medical device industry typically experiences some seasonality with revenue trends, generally the lowest in the first and third quarters and strongest in the second and fourth. Gross profit for the third quarter 25 increased to $8.3 million, compared with $7 million in the prior year period. Gross profit margin for the third quarter 25 increased to 64.4%, compared to 60.5% in the prior year period. With respect to tariffs, we continue to monitor trade policy and tariff announcements, including the recent executive orders issued by the U.S. Federal Administration regarding tariffs on imports from various countries. At this time, the overall impact on our business related to these or any other tariffs that may be imposed remains uncertain and depends on multiple factors. Operating expenses decreased to $9.1 million for the third quarter 25, compared to $10.6 million in the prior year period. The decrease in operating expenses was driven by a $0.6 million decrease in selling, general, and administrative expenses, a $0.3 million decrease in research and development expenses, a $0.3 million decrease in salaries and related costs, and a $0.2 million decrease in professional services expenses. We are pleased to see the results of the cost-cutting measures taken in the fourth quarter of 24 in our current numbers. Loss from operations decreased $2.8 million, or 77%, to $0.8 million. Net loss attributable to stockholders was $2 million, or 5 cents per share for the third quarter 25, compared to $4.7 million, or 14 cents per share in the prior year period. Adjusted EBITDA loss decreased 96% to $0.1 million, compared to $2.4 million in the third quarter of 24. As a reminder, we provide a detailed reconciliation from net loss attributable to stockholders to non-GAAP adjusted EBITDA loss in our earnings press release. For the 3 months ended September 30, 2025, cash used in operating activities decreased to $3.5 million, compared to $4.4 million used in the prior year period. For the 9 months ended September 30, 2025, cash used in operating activities decreased to $5.5 million, compared to $15.1 million used in the prior year period. We are pleased with the cash and working capital management in the first 9 months of 2025, with cash burn returning to a lower but more normalized rate in the back half of the year as a result of the impacting changes in working capital as a result of the AON launch. As of September 30, 2025, the company had cash and cash equivalents of $25.1 million, compared to $31.7 million as of December 31, 2024. We believe, based on our cash projections, including the uptake of the AON platform, working capital management, and our strict cost controls, we will yield cash through 2027. Turning to a review of our 25 guidance, which we updated in our third quarter 2025 financial results press release issued earlier today. For the 12 months ending December 31, 2025, we expect total revenue in the range of $50.5 million to $52.5 million, up from our previous range of $50 million to $52 million. We believe this increase shows the strength of the AON ongoing commercial launch, especially when you look back at our original guidance of $47.6 million to $49.5 million for 25, or compared to the $48.1 million for the year ended December 31, 24. Our revenue guidance assumes surgical aesthetics segment revenue in the range of $43 million to $45 million, up from the previous guidance of $42 million to $44 million. Again, since we initiated the soft launch of AON this summer, we have increased expectations for original guidance of $39.1 to $41 million. In addition, this is compared to the $38.6 million for the year ended December 31, 2024, reflecting current trends. OEM revenue is expected to come in at approximately $7.5 million, down from the previous guidance of $8 million. As the company focused resources on the surgical aesthetics segment, this is compared to the $9.5 million for the year ended December 31, 2024. For the purposes of clarity, we increased the guidance in the surgical aesthetics segment by $1 million and decreased the guidance in the OEM segment by $500,000 from the guidance previously provided in our second quarter conference call. We now anticipate gross margins of approximately 61% for the year and total operating expenses not to exceed $40 million. This completes our prepared remarks. Charlie and I will now open the call for questions. Operator?
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Should you have a question, please press the star followed by the number 1 on your touch-tone phone. You will hear a prompt that your hand has been raised. Should you wish to decline from the polling process, please press the star followed by the number 2. If you are using a speakerphone, please lift the handset before pressing any keys. One moment, please, for your first question. Your first question comes from Dave Turkaly with Citizens. Please go ahead.
Hey, good morning, and congrats on the launch and the spending progress. I just had a clarification one up front here. I know you said that generator sales were down, but I don't think I actually understood the explanation for why that was. You said something about AON, but I just want to clarify that up front if I could.
Yeah, so we're changing obviously the way that we classify things because AON obviously has to have an Apyx One generator. And if you think of our customer base, we have customers that already have an Apyx One generator. They can actually just buy the rest of AON and have their existing Apyx One generator integrated into AON. And then we have an installed base of RS3 generators. They need to upgrade to an Apyx One generator and then buy the rest of AON. And then obviously if they don't have any of our Renuvion technology, they would need to buy all of AON. That would include an Apyx One and an AON with it. And so we're obviously classifying those as just AON sales, even though they have an Apyx One in them.
Guys, thank you for that. And then I'm trying to think about, the gross margin impact from this. I don't know that you've publicly commented on sort of the ASPs or what the uptick might be here, but I guess I'm imagining that the handpiece and the capital might be premium to what you were selling in the past. And as we're looking forward, I don't know if you are comfortable giving any commentary, but I imagine there has to be a significant, gross margin uptick if that is the case. And I don't know if you can give any color, as we're all trying to look to the out years now, but how significant or how much of an uptick do you anticipate as this, rollout continues? Thank you.
Yeah, no, thanks for the question, Dave, but you probably know what my answer is going to be in that we're not giving guidance out from either a revenue or a gross margin point of view. The only thing that I would say to that, just to give you a little bit of color, is, we've always said that the surgical aesthetics business, obviously, especially in the U.S., has the highest gross margins anywhere. So the more we sell here of that, the better it is for the entire company. But we're not going to give any color or any guidance on what that is right now.
Thanks a lot.
Thank you. The next question comes from Sam Eiber with BTIG. Please go ahead.
Thanks. Good morning, everyone. Thanks for taking the question. So clearly a really exciting opportunity on AON and getting devices out in the market. But I want to ask maybe about on the consumable side and maybe some pull through you can get on higher device utilization because of all the new capabilities that AON has. So I guess my question is, should we also expect a big uptake in consumables in addition to capital sales next year?
So I think the uptake would come back from selling new units to people who don't have Renuvion technology today. I think for customers that are upgrading to Renuvion, they're using obviously Renuvion after their liposuction procedures today. So I don't know that you would necessarily see an uptick from from the existing base, but obviously adding new customers will certainly help that. We had a good third quarter from a consumable standpoint, both in the United States and internationally. And obviously, we're always focused on driving utilization. So as we add more customers, that's going to be the greatest driver of utilization in the future.
Okay, that's helpful. Maybe I can ask a follow-up on the latest you're just seeing in the market environment. Just getting a sense of any changes to demand trends, GLP-1 dynamics at play. With just your latest thoughts on the market at this point. Thanks.
Yeah, look, I think it's consistent with what we've talked about before. Is we've always said that we believe the market has been disrupted from the GLP-1 drugs. We think that companies that have technologies that address skin laxity and address body contouring and are focused on the surgical side of things are going to be where the action is at. And, we obviously think the technologies that we have with Aon and Renuvion are going to be very well suited to this marketplace as we keep moving forward and as more people are taking these drugs and having the side effects from these drugs and then wanting to have, treatment from these. I think, the other side of it is it was McKinsey that just came out with the study that 63% of these patients that are on the GLP-1 drugs are new to aesthetics. And so I think we're just going to see, I think we're in the early innings of this drug. And I think, over the next decade, it's going to be a very good time to be a plastic surgeon in the world. That's for sure.
Hello, Sam?
Yeah, that's it for me. Thanks for taking the questions, guys.
Thank you. The next question comes from Alex Freeman with Lucid Capital Markets. Please go ahead, sir.
Hey guys, thanks for taking my question and congratulations on a really nice quarter and the launch of Aon. Wanted to ask you, Charlie, how much of your growth in the quarter was driven by the single-use hand pieces and what's really driving that? Are you seeing more lipo procedures being performed or better attach rates for Renuvion, or are you perhaps starting to see more standalone uses of Renuvion as well?
Yeah, so I think that one thing that the quarter by quarter is always a tougher way to look at it. As you know, I think last quarter we were down a bit. This quarter we were really strong, both the United States and internationally, in the growth of hand pieces. And I think the answer to your question is all of the above. So, we're obviously seeing new doctors come in to adopt the technology for the first time. We're seeing a higher attach rate from patients that are coming into doctor's office and requesting Renuvion. And so after a body contouring procedure, they're going to use that. And then we are seeing it used on a standalone basis. And so I think the answer is all of the above for that. And again, as people are looking for solutions to take care of their loose and lax skin, especially following the treatment of GLP-1s, I think this is a trend that's going to play out for a lot of years to come.
That makes a lot of sense. Appreciate your thoughts on that. Thanks, Charlie.
You bet. Thank you.
Thank you. The next question comes from Matt Hyatt with Craig-Hallum. Please go ahead.
Good morning, Charlie, and congratulations on the strong quarter. Maybe, and I apologize if I missed this, but talking a little bit about the pipeline. So obviously you've gotten the initial launch out. Customers have adopted and are utilizing the platform. You've done some KOL events. They're helping kind of spread the word. Are you seeing that pipeline not just, grow, but maybe you're reaching an inflection point where it's accelerating faster? And if so, how are you able to kind of get those implementations done with the team? Have you had to add to that team to meet the demand or anything? Any color along those lines would be helpful. Thank you.
Yeah, obviously, we increased our guidance by $1 million for surgical aesthetics in the fourth quarter. And you can see what that, obviously you can do the math and translate to see what that works out to in the fourth quarter from a revenue perspective. And obviously that is on the back of AON and our expectations for AON. As far as pipeline, I'm not going to comment too much about that, but the team has done an amazing job of shoring up the supply chain, getting the supply chain to where it needs to be, and being able to take advantage of the interest and the orders that we're getting with AON. As far as the installations go, we've got a third party that is helping us do that, and so that is taking away some of the burden from the existing employees. But we're doing a really good job as a company of being able to make these, to get them installed and to get the doctors trained and get their staffs trained and get them up and running. And so it's been a very, very good rollout of a new product, and especially a product with this much technicality and sophistication in it. And the team has just done an amazing job of that.
That's great. And maybe, and I realize it's early days and you're focused on the U.S. market, and rightfully so, but how should we be thinking about cadence of rolling AON out internationally? Are there maybe one or two geographies that you'd like to target for 26, and remind us what that process is to bring AON to the masses outside of the U.S.? Thank you.
Yeah. No, it's a good question, Matt, and we're not going to get specific on that on today's call, but obviously we want to have AON registered everywhere in the world, because it's not just a product for the United States, it's a product for every surgeon worldwide. Some of the bigger focus markets obviously would be Europe, the Middle East, Brazil, Latin America, some other countries in Latin America. Europe is all together. So Europe, you just need a CE mark, and once you get one, you get them all. There are some countries in the Middle East that actually accept FDA, and so obviously those we would probably start sometime next year there. And then each individual country has its own registration process, and we'll be starting those processes in a lot of the countries. So we'll talk more about that, when we get into 26 and we start doing that. And you're right, our focus right now for the third quarter and the fourth quarter is solely on the United States.
Got it. All right. Thanks again.
Thank you.
Thank you. At this point, there are no further questions. I will now turn the call over to Charlie Goodwin for closing remarks. Please go ahead, sir.
Thank you, everybody, for attending the call. I want to thank the entire Apyx team for their dedication and tireless execution over the past 3 months. It has been an exciting time for the company as we see our plan turn into reality. We appreciate all the support we've received from our shareholders during this time, and I thank you all for attending.
Thank you. Ladies and gentlemen, this concludes today's conference call. Thank you for your participation. You may now disconnect.
Goodbye.